We're taking a look at the currency market now with Nomvuyo Guma, Macroeconomic Strategist at Standard Bank. Thanks so much, Nomvuyo, for joining us today. Well, we had the rand edging higher against the dollar on Friday, commentary being that the markets had started trusting South African authorities and the fact that they will more likely support the currency moving forward and prevent further depreciation. So it seems that Finance Minister Pravin Gordhan's signal that the government was ready to use forex reserves to stabilize the market really seeming to buffer things here.
Morning, Alishia. Yes, you're absolutely right. The rand did strengthen against the dollar last week, but we'd see that more as being part of an overall move. If you look at the week as a whole, the rand actually strengthened against the dollar for the entire week, and that was largely a result of the fact that risk aversion has abated, and as we know, that's always good for risky assets in the rand in particular, which does tend to have a more volatile reaction in relation to other currencies depending on the risk environment. So the fact that there seemed to be some resolution or a plan on the cards as far as the Eurozone debt crisis is concerned last week really seemed to calm markets, and as a result we saw that positive sentiment coming through. But of course you can't discount the impact that the Finance Minister's comments had. The market seemed to take that news very well, and so all in all it was a positive week for the rand.
Let's separate local happenings from happenings internationally, just focusing on the Finance Minister's comments. I mean, we've got volatility still a prime concern, so is direct intervention to stabilize the rand really viable at this stage? Because one would assume it's got to be tricky for government where you've got a local currency that is so heavily traded.
Oh, absolutely, Alishia, and that's always been one of the key points when it comes to the rand, that yes, it is a volatile currency, but precisely because of its volatility, intervening in currency markets is always going to be a very risky proposition, especially when you consider the size of South Africa's reserves in the region of $50 billion and compare that to the $2 trillion odd that goes through currency markets on a daily basis. It really then becomes quite obvious that our reserve situation wouldn't be quite sufficient to take on global markets on a sustained basis. So I think what was key in the minister's comments was just he was saying should the need arise, government would be prepared to lend support, but one would have to imagine that that would be on a very limited and short-term basis.
Of course, a lot of that will depend, not so much so on domestic economic fundamentals, which have been pretty stable of late. It's more driven by those international developments that you alluded to a little earlier. We had the G20 meeting having come and gone this weekend. Any significant takeaways from that meeting from your side?
No significant takeaways, Alishia, but that was largely expected. This was the G20 finance ministers meeting. Next weekend we have a meeting of EU leaders. They're going to, one expects that they would come up with a more concrete plan, and that's to be presented at that summit and then presumably presented to the markets the following Monday, or as soon as the plan is ratified. And then after that we also have a larger G20 meeting. So I think the meetings coming up are largely expected to have greater significance, or there's likely to be more detail coming out of those meetings than what we saw coming out of this one.
Of course, ahead of those meetings, we've got China in key focus as well. We're anticipating second quarter GDP numbers come tomorrow morning, and the market's paying keen attention to what actually comes through there, with a lot hinging on the Chinese ability to fill a hole that both the EU and the US have created in the global economy.
Oh yes, that bit of data we view as being one of the main risk events for the rand this week. As I said, it's strengthened largely on the fact that risk aversion has abated. But should the Chinese GDP numbers come out worse than expected, that is growth slowing to a greater degree than what is expected, then we'd expect to see a sell-off in risky assets, and then all bets are off, and one would expect the rand to weaken quite rapidly from that point onwards. So really quite a lot hinges on Chinese GDP. Yeah. Is going to give us some insight into how the global economy is holding up while Europe and the US grapple with their problems.
Nomvuyo, very interesting that over the past few weeks fears have grown that the economy on that end could be slowing, and we've been slightly more positive when it comes to economic data coming through from the US. We're anticipating inflation and retail sales numbers across the Atlantic this week as well. Your expectations there?
Our expectations are pretty much in line with consensus, Alishia. But again, of course, the big factor to consider there is whether the numbers emerge much higher than consensus or much lower than consensus. A number that would be much lower than consensus would again feed into expectations of global growth. And should those be exceedingly negative, then that's going to filter into our economy as well. And one would expect to see the rand then weaken on the basis of that rising risk aversion.